What's going on, ladies and gentlemen? Welcome back to the Mpire Financial Podcast. Your host here today, Waldry Marte. I wanted to apologize in advance because I'm not feeling very well today. These allergies are kicking my butt. But with that being said, I'm still here delivering information to you guys because it's super important for us to be informed every day about what's going on and what we can do to increase our finances, to better our financial household, and just to overall have the up-to-date information. So today, guys, I'm going to talk about non-traditional loans. Basically, what is a non-traditional loan? If I don't qualify for an FHA loan or a conventional loan, what can I do to still buy a house, right? There's always options. They say if there's a will, there's a way. So if you have the will, I will show you the way. If you do not report enough income on your tax returns, is typically the reason why you wouldn't apply for a FHA or a conventional loan. So non-conventional loans are really out there if you're having a hard time qualifying with your income. And what are the options? If your tax returns are low and you're typically is for a self-employed individual, usually self-employed people don't report all of their income on their tax returns because they don't want to pay taxes. There's certain strategies that they're implementing, with cost segregation or perhaps lowering the income taxes so they don't pay as much taxes. Clearly said, the more income you report on your tax returns, the more taxes you're going to pay. If you do not want to pay taxes or you don't want to report high income on your tax returns, these are the products that are available to you. There is a program called the bank statement program through non-traditional financing where the bank will analyze your last 12 or 24 months bank statements, whether it's a personal or a business account, and will give you up to 70 or 80% of the deposits as your actual income. What does that mean? So if you deposit on average $10,000 a month into your personal or business bank statement, the bank will give you up to 80% or $8,000 as your actual income, right? We all know that if you deposited $10K a month on average on your bank statements, that means it's $120,000 in 1 year, which means that you're either going to report $120,000 or you're going to report a lot less than that on your tax return. We can use your 80% of your income, right? That's huge. That's the difference between someone qualifying for example, $500,000 versus $100,000. If your tax return says 10 grand versus your bank statements are saying you're depositing on average 8 grand, right? Per month, that's a huge difference, guys. So this product is amazing for that. Additionally, we also have a program that instead of analyzing your bank statements, we can look at your profit and loss. A profit and loss is a document that your accountant prepares for you generally that will say what is the income and expenses of the business and will give you a net income. So basically your income after expenses that's left over. So let's say, for example, you generated $200,000 in revenue. After $100,000 in expenses, you're left with $100,000 in income. We're going to look at a profit and loss to also analyze your income and prove you for the loan, which again is a huge difference on what you're going to report on your tax return. We can even look at your assets and you do an asset utilization loan. So for example, this is really good for people perhaps that built a business and sold it after a couple of years, or maybe people who are retired now and have a lot of assets, right? They have 401k, they have Roth IRA, they have stocks, they have Bitcoin, they have all these different assets that you can save money in. We can look at those assets and divide it by a certain amount, and that will be your actual income. Where perhaps someone, for example, I think Jeff Bezos, I think he makes like $40,000 a year. I don't know if it's Elon Musk. But the point is, highly billionaires only report $40K a year in income tax. The fact of the matter is that they have stocks and they leverage those stocks as actual income to be able to make money. So if they need money, they're going to sell a couple of stocks and they're going to use that income from selling the stocks to buy whatever they got to buy. Well, we don't have to require you to report or rather sell off those stocks or sell off your 401k. We can actually take the percentage of what's in your 401k and use that as actual income to qualify you for a mortgage, right? So the point is, guys, that there's many different ways that we can skin the cat, if you will, or we can qualify you for a mortgage as long as you're willing to help us help you by providing us a bank statement, by providing us a profit and loss, by providing us your assets in order to do asset depletion loan. But these loans are available out there for you. Generally speaking, we're going to require for you to have at least a 640 credit score and put a minimum of 10% down. In order to get a 10% down, you typically have to have a 700 plus credit score. Just think about it this way. The lower your credit, the more down payment. The higher the credit, the less down payment with a minimum of 10% down. So you guys heard it here first. If you are self-employed and you haven't filed high tax returns for the last 2 years and high enough to qualify for a mortgage, there are options for you through a non-traditional bank or a non-traditional loan. If you want more information, give me a call, shoot me a text, or write me an email. You guys know how to reach out to me. Please like, comment, subscribe. Let us know if this content is good. Let us know if we're helping you today. Looking forward to seeing you in the next episode. Peace.